Hi there, I'm Tyler Bollhorn. Welcome to the Trade Scores market analysis for October 25th, 2010. Let's start off with the U.S. market indexes. We always look at ETFs. Here is an ETF of the Dow 30, symbol DIA. And you can see here that this market is run right up to resistance where we would expect it would get stuck. However, we haven't seen the nasdaq stall at resistance, and the Dow is yet to break down. Now there's the upward trend line that I've just drawn on that chart. If that upward trend line is broken, then expect that we will spend some time consolidating sideways. However, my expectation is that we'll pause here for a few days and then the Dow will play catch up with the other major indexes. Let's move along and take a look at the chart of the NASDAQ 100. And here you can see what I mean. The NASDAQ paused briefly at resistance, or just under it, but ultimately broke through and continues to be in a strong upward trend. And I think that it is likely to continue that upward trend, and I would remain long, although certainly with some caution given the gains that the market has made thus far. Lastly, on the U.S. equity index side, I want to take a look at the S&P 500. You can see that it is short of long-term resistance, and today opened strong but closed weak, closing below its open for the day and actually quite near the low. And so we may see the S&P 500 roll over here, and that could coincide with the Dow stalling at resistance. So there is some potential for a little short-term pullback. However, given that there's still some upside on the S&P until that line of resistance, I wouldn't count the bulls out yet. All right, let's move on to the TSX 60, the Canadian benchmark index. You can see that the TSX 60 has broken through resistance a couple of weeks ago, continues to be in a strong upward trend, has pulled back for a very short period, basically taking it back to the trend line. My expectation is that it will continue higher, but of course if we get a break of that upward trend line, then look for the market to consolidate sideways in that sort of a pattern in the near term. All right, let's take a look at some of the currencies now, because those of course are quite important for where the overall market goes. This is the the U.S. dollar index, and it is in a long-term downward trend. You can see the downward trend line, but it is quite far below the long-term downward trend line, so I wouldn't be surprised to see the U.S. dollar come back a little bit here, come back up to that downward trend line. However, I wouldn't be bullish on the U.S. dollar except for the very short term. Canadian dollar, I'm going to zip up here to the Canadian Dollar ETF, which is FXC. Canadian dollar has done relatively well compared to its U.S. counterpart. It is in a slight upward trend, although it's hard to call it that. Really, the Canadian dollar has been stuck in this fairly narrow trading range. It doesn't look like it's narrow here, but in the context of percentage-wise, this is 93 cents to a dollar. That's a 7% range over the last few months. All right, let's take a look at some of the commodities. Of course, they will go up with weakness in the U.S. dollar, go down with strength in the U.S. dollar. You can see here gold, which is the commodity that most are watching these days, has suffered a little bit over the last week or two, but really just taken it back to that long-term upward trend line. It did not break the upward trend line, and therefore I do not think it is yet time to be bearish of gold, although if we do get a break of that upward trend line, at that point you need to be cautious. The TSX Venture Composite Index going straight up because of strength in gold, because of strength in energy. The junior mining stocks in particular are doing very well, and I would continue to look to that market for speculative trading opportunities. Certainly not for everyone, but if you like the penny stocks, that is a great place to be right now. Here's a chart of oil, and it remains locked in this trading range. There are rising bottoms on this chart, so there is optimism coming in here. But there's a lot of resistance to work through for this market, and I wouldn't be too overly optimistic. Expect it to be range bound in the near term. Well, that pretty much sums it up for this week. In general, markets look strong, but with some potential for a pullback given the weakness in gold, given the strength in the U.S. dollar. We may be getting toppy here as the Dow comes into resistance, but we could go for another week or two before we top out and see some profit taking. Profit taking could happen any day, so be cautious. Have a great week in the market and trade well.